and welcome to our Proactive studio. Here today from Atlantic Lithium, it's CEO Keith Muller. Keith, so glad to have you with us today.
Good morning, Alicia. Thanks for having me.
So a definitive feasibility study is out this week for your Ewoyaa Lithium project in Ghana. Quite a few key figures here, one of which, of course, is that you expect payback on this project within 19 months. Give us an overview.
Sure, thank you. Look, this has been a culmination of a lot of work over the last 7 years, and especially the last 12 months. The team has been working hard to deliver on this. So as you say, payback is 19 months. Extraordinary numbers coming out of the DFS. So post-tax NPV around $1.5 billion, free cash flow from the operation $2.4 billion from a net revenue of $6.6 billion. Average life of mine EBITDA around $316 million per annum, internal rate of return of 105%, and then that amazing payback of 19 months. So quite amazing for us.
I'm sure one of the key documents front of mind for investors at the moment is your pre-feasibility study for Ewoyaa. How do these two documents compare?
Certainly, look, I think the first one to mention is it's important to recognize as we progress through the development of these studies, we're de-risking it along every step. So one of the important things in the DFS compared to the PFS is we now only have 6% of the minerals processed sitting in the inferred category, where that was as high as 30% in the PFS. From a geological risk perspective, that's quite a reduction in that inherent risk always associated with the geology. And then I think for more importantly, we now have 80% of our capital expenditure priced. So the $185 million that we're seeing in the DFS compared to the $124 that we highlighted in the PFS, much more certainty and confidence around that number. And of course, I think the market would always look at that increase and wonder where that is coming from. So maybe if I can address the key elements that has just driven that capital expenditure up. So the first one is we've increased the plant throughput by 35%. So we're now processing 2.7 million tons per annum as opposed to 2 million tons in the PFS. And that generates significant more product to the market. And this is the right time to do it. We've also now looked at bringing some production capability forward. Many of our peers are looking at a DSO market. We don't want to bet on the DSO market. We are not so sure that the DSO market will still be there in 2 or 3 years from now when we're ready to go. So what we are proposing is to bring in a modular DMS unit. So it's a little bit like a Meccano set. It's built and constructed off-site, brought over in shipping containers and assembled within a couple of weeks at the operation. That will enable us to produce a concentrate pretty much as soon as 4 months after we break ground. During this period, we'll be generating cash from these modular units whilst we are building the main DMS plant. A couple of benefits from that is we can work on training the local national workforce. We generate cash early, so that reduces our peak capital requirement. And all of this is happening in parallel while we are constructing the main DMS plant.
Interesting to get some insight here on your preferred development scenario. Now, Keith, I want to take a little bit of a step back now, talk about Ewoyaa in the context of particularly global decarbonisation, but the North American EV supply chain. Now, you have an offtake agreement with Piedmont Lithium based in the North America. How does this DFS position the company in the context of what's happening there?
So, Alicia, the arrangement we have with Piedmont Lithium is they will earn into 50% of ownership at the project level for funding $70 million towards the development and the build of the mine. And that's a great partnership to date. Certainly, the 50% of the offtake that they will have access to will go straight to their Tennessee hydroxide plant. And it looks like that will about come online at the same time as we're going into production. There's perhaps a little bit of float in the schedule still. So really looking forward to supporting that North American effort in decarbonisation and having access to that market. We still have 50% of our offtake unencumbered.
And of course, closer to home, what are you seeing in terms of the mining industry in West Africa and more particularly Ghana?
Look, I think Ghana certainly wants to play a role in the decarbonisation and into the EV battery supply chain. We've seen a lot of action around African nations, a lot of commentary in the world around the role that Africa is going to play in the decarbonisation effort and in the supply of critical minerals. Ghana wants to be at the forefront of that, and it's a pleasure for us to deal with a government that's so progressive that wants to participate in this. In terms of what this will mean for the local industry in Ghana, we'll create just over 800 direct jobs from this operation when we ramped up. And there's a large local community surrounding us, so a lot of benefit to the local community, a lot of benefit to Ghana, and I think it's a mutually beneficial proposition between Atlantic and the government of Ghana.
All right, let's talk next steps here, Keith. What have you got in store now the DFS is under your belt?
So look, the next step for us, which we are immediately working on, is our permitting process. We're expecting to receive our mining lease in this coming quarter. So the process in Ghana from a permitting perspective is once you receive that ministerial approval, which we are expecting soon, we will then start working on our EPA permit. That's about a 9 to 12 month working program to get that through. Following that, we'll get ratification in Parliament of the mining license. And then short after, we will be able to break ground. At the moment, we're expecting to break ground in September 2024, so quite a short runway to break ground. And then at the same time, when we mobilize to site in September, is when we'll mobilize these modular units for early production as well. Then in terms of what we are doing as Atlantic, as a business, we're now starting to grow our team. We're moving from an explorer to a developer, so we're bringing a lot of operational experience into the team. So you can expect to see a lot of advertisements going out to bring people on board. We have to grow the team to be able to be in production by September next year. We're also going to start completing the detailed engineering of our stage 1 development. So the main process plant, we've completed the feed with the engineering house in Perth in May this year. So we've now started moving forward to complete the detailed engineering so that we are ready to go when we break ground next year in September. And then probably in terms of exploration, so we've got a large auger drilling and soil sampling program underway at the moment. What we're looking to do is identify those targets so we can send RC rigs in. We want to do that a little bit closer to production. We are mindful of managing our capital. As I mentioned, there's been an escalation in capital expenditure as it relates to the mine build. So we're just mindful of how much we spend on the exploration in the near term. But the low cost exercise for us is to generate those targets so that we are ready to go as we approach those final phases of going into production.
All right, well, it sounds like the DFS is just the start of the story for your Ewoyaa Lithium project in Ghana. CEO Keith Muller, thanks for bringing us up to speed on all the latest developments here. We're looking forward to hearing from you and the team very soon.
Thank you, Alicia.